In this lecture, I want to look at another method that some traders use to improve their trade entries, and that is to use the RSI indicator. So RSI stands for Relative Strength Index, and it's an oscillator based on the number of up closes versus down closes. Without getting too technical, high RSI values indicate a security is overbought, and low RSI values indicate a security is oversold. So traders usually buy when the RSI is low and sell when the RSI is high. So for this test, let's take a look at the piercing line pattern, and let's see what happens if we buy a piercing line pattern, but only if the RSI 14 is below 30. And this indicates that the security is in oversold territory. Hopefully, by introducing this RSI rule, we're going to avoid buying any piercing line patterns that have already gone up a significant amount. And here's an example of what we're looking for in the chart of American Express. You can see we have a piercing line pattern, and yesterday's RSI 14 value was under 30, indicating that the stock is oversold. So if you'll remember, the piercing line pattern wasn't especially profitable on its own. Here are the original results that we got from buying the pattern on the close for futures and stocks with the various holding periods. So for example, you can see that in futures, our best recorded result was only break even with a 10-day holding period. And in stocks, our best result was an average profit of 0.28% per trade over 10 days. Now we're going to see what happens when we buy the piercing line pattern on the close, but only if the previous day's RSI 14 value is under 30. And here you can see the outcome from including this extra RSI rule. As you can see, we've actually had some very good results from this in stocks, where the average profit per trade has gone up substantially for every holding period. Although in futures, the results are pretty mixed. So it seems that combining the piercing line with RSI 14 works quite well here for stocks, and our best result came from a 5-day holding period where we saw an average profit per trade of 1.17%. This is much better than the original 0.21% per trade. So this begins to indicate that combining the piercing line with RSI might be a good strategy for selecting some swing trades in stocks. The only downside here is that we did see a lot fewer signals. And unfortunately, the results in futures were much less pronounced than in stocks.